Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing News, and I thought we would talk about Vinfast. So I'm calling this story, Vinfast Talk is Cheap, because, well, talk is cheap. We've recently talked about Vinfast plans to go public through a SPAC. They're going to be going onto the New York Stock Exchange through acquisition company Hong Kong-based Black Spade Capital Limited. So this is a company, by the way, that is a private investment arm of Lawrence Ho. He is the head of Melco Resorts and Entertainment Limited, which operates casinos in Macau and the Philippines. And this acquisition company was actually reportedly looking to bring an entertainment company public. So when you put a SPAC company onto the New York Stock Exchange or one of the other exchanges, you usually have to put up around $500 million. And you're just a company that's looking for a company.
Put aside that I personally think that SPACs should probably be outlawed by the SEC, or at the very least severely limited and scrutinized, so that public retail investors have a better understanding that often these companies being brought to public are not profitable.
Right. So anyway, the terms of the SPAC are looking like Vinfast would be valued at about $23 billion. Yeah, billion dollars with a B.
And so what's the typical game plan before a SPAC? Lots of PR.
Exactly. Flood the interwebs with press releases about how this upcoming SPAC is going to be the next big thing.
You work the average retail investor into a frenzy, and then things go quiet and the stock price falls.
Case in point, let's call up the stock chart for Canoe, circa early 2021. Now let's look at Arrival, circa late 2020. How about Lordstown Motors, late 2020? And let's look at Lucid, early 2021. Do you see the pattern here? You hype the investors with tons of positive PR before you go public, hopefully running up the stock price soon after you hit the public market. And then, well, you weren't making any money, so there's really not much to be excited about. So down it goes. And that brings me back to Vinfast.
The founder, Pham Nhat Vuong, chairman of Vingroup, Vinfast's parent company, told investors during its annual general meeting he expects the automaker to sell up to 50,000 EVs this year.
That's right. He said he expects EV sales to grow 600% this year. And while we're at it, let's throw in some more good news. Like I said, talk is cheap. So how about we say that Vinfast models may include an electric pickup truck? And how about a $10,000 mini car? Now, I'm not just saying that. That's what they said. And I mean, the thing is, they don't have to ever do it, but it certainly sounds good, doesn't it? I mean, Rivian hasn't even hit their projected production numbers yet, which is about the same as these numbers. So the SEC can't get too upset if we don't meet ours, right? And let's go back to the 600% EV sales growth this year. Vinfast sold about 7,400 cars in 2022. So yes, if they made 50,000 cars this year and sold them, that would be a 600% increase. But come on. First, do you really think that they can pull off 50,000 cars sold in the U.S.? They have to ship them over on boats. It's not like they're even making them here. And even if they do, it's still only 50,000 cars. Rivian is currently worth $12.6 billion. You're telling me that Vinfast should be valued at double that? Rivian has a factory here.
Right. Do you know how many hurdles Vinfast is going to have to get over to be successful?
Right. I mean, they aren't even going to qualify for the U.S. federal tax credit until their factories are in the U.S. and they're up and running. And they haven't even broken ground yet on the factory they say they're going to build.
Right. Their U.S. factory won't even start production until 2025 at the earliest.
And let's talk service. If you're interested in buying one of their cars, one of the first questions you're probably going to ask yourself is, well, when I need to get service for it, where am I going to bring it? So Vinfast is going to have to make a whole service network, which, as we've learned from all other car companies, is not easy. And who's going to buy a car from a new company at all? I mean, Vinfast is a new company. Even if they had like a stellar, brand recognition, which they don't. I mean, honestly, if you said Vinfast to 100 people on the street, go try it. Say, Vinfast, what is it? They're probably going to say it's a new diet supplement. Or it's a way to register your car quickly. Is that an app?
I mean, the thing about the pickup truck to me just screams like they're just sitting in a meeting like, what can we say that is going to excite people? And they're like, well, what's big right now? And they're like, I don't know, electric pickup trucks. And they're like, well, we make electric cars.
Why didn't they start with that?
All we have to say is we're thinking of making an electric pickup truck. That is so simple to say.
Well, and just think about the market for a second, right? I mean, because the number one in that market is Ford with the F-150. So you have to take Ford buyers and you have to make them go, oh, I'll buy a Vinfast.
No, but I mean, to the average investor, for some reason, it's just like, oh, great, they're going to make an electric EV.
No, but I mean, even assuming that they did, okay, and they shipped them over, right? you've got VinFast sitting on a lot next to Ford F-150 Lightnings, next to Chevy Silverado EVs, next to Tesla Cybertrucks, and you're telling me that as a pickup truck buyer, I'm going to go, yeah, now that VinFast, that's for me.
Well, and also, hello Atlas, hello Lordstown, Nikola. How many fake EV pickup trucks are we going to see before the market is going to realize that this is not something to invest in necessarily?
And another thing is with pickup trucks, just to stay focused on that for a second, that is a segment where you really need quality. Like people are buying these because they're going to use them and they're going to use them hard and they want them to last. And so a company that's the first ever making their first pickup truck, you're first just going to have questions about like, how reliable is it? Look, that is the problem here. They've completely missed their mark. They were probably planning this back when SPACs were big, and they're like, yeah, we'll get in on that. And then for whatever reason, they were slow to get in on it. If they'd come in at 2020, I don't even have any doubt. I bet they would have been in with the pack of, canoes and arrivals, and they would have SPACed.
And they would have SPACed with, I don't know, 50 billion,
maybe
100 billion, like insane numbers that we were seeing back then. I bet 26 billion, which is already twice the price of Rivian.
Well, I just want to go to the Lordstown chart again. It's 27 cents a share. Like it's a joke. And I'm not saying VinFast is a joke, but I am saying that this much capital, this much market cap is just not conceivable for a company that hasn't even proven itself yet. The whole point of going public with a normal IPO is that you've proven to investors that you can do the thing you say you're going to do and you can make money at it.
Right. Well, and also it's just like, how about growth? How about you grow? How about you start small,
right,
and then you grow from there? Like, why do you need all this capital right at the very beginning of your company? I mean, I know they're not right at the very beginning.
But
I get it, but like, show that you can build a product successfully. And I know it's economies of scale. You gotta, how would you sell it at a competitive price? But it's just like, I don't know. Why don't you start somewhere?
They were hit with the IRA. I mean, don't forget, these plans had to have started a couple of years ago.
True.
They did not know that the Inflation Reduction Act was coming, I don't think, because no one really knew it.
No one really understood what it would do.
And that it would pass. I mean, it's kind of a fluke that it passed. The fact that it did means that you have to have your factories and all of your minerals here in North America.
Otherwise, you have a $7,500 disadvantage.
Right, which is 10 or 20% cost. And I mean, as inflation goes up, that's going to make a big difference. They have so many strikes against them. And again, this isn't to be mean to VinFast. Like, I think they're great that they're making EVs. I think it's great that they're doing them in their country and that they're trying to start in a new market. But to then do a SPAC and expect investors to pay this kind of money, and this is, you might be like, well, why are you talking about this on disruptive investing? Because they are trying to disrupt, right? EVs are disruptive in and of themselves, but you have to get everything right to be a successful company. And look, disclaimer, I'm not a financial advisor. Don't take our advice as financial advice. Do your own research. But I'm staying as far away from this SPAC as possible. Yeah, I'd love to know in the comments below what you think.
Thank you so much for joining us. We'll see you next time on Disruptive Investing.